Hey, and welcome to another FogCutter Live. I'm Mike Curtis with Traders Edge Network, and we got a fun one today. We're officially in summer, crazy schedule. I'm here in Southern California, and Preston is off traveling today. So, Kyle, we've got you stepping in for Preston. Those are some big shoes to fill, but glad to have you on. So it's not just me rambling into the microphone today. Welcome. Say hello.
Hey everyone, happy to be here.
Yeah, Kyle's been part of the Traders Edge crew for what, Kyle, over 10 years now. He's
Yeah.
behind the scenes, our chief technology officer, um, builds a lot of our tools and systems here at Traders Edge, and is one heck of a trader himself. We like to jokingly call him Crypto Kyle, crypto with a K. So Kyle's going to help guide us a little bit. So Kyle, let's dive in, talk
Let's do it.
about what we saw last week. And I wanted to kick this off with just a chart of the S&P 500, because we've been talking about these last 3 months, how we've covered so much ground as we put in the lows of that correction, all the tariff uncertainty that really rattled the markets. But if we zoom in, like what I really wanted to cover was what we've done these last 2 weeks, where the S&P has covered about 5% in 10 trading days, pretty much consecutively. Now we're opening today with just a little bit of a pause. And I wanted to talk just for a second about why that's to be expected. You can see, Kyle, what moving averages do you have on the chart there?
It's a 50, 100, and 200.
Okay, perfect. So just kind of your standard moving averages. You can see how stretched we've gotten from those moving averages. So when we cover a lot of ground in a short period of time like this, it's pretty common to see some profit taking. It's pretty common to see maybe some consolidation in the price action, one or the other, because it's taken such a strong move higher. The market's pushed, and we just get to these points where it's tough for the buyers to come in and have much of an appetite. So, I mean, you've seen it just in this last 3 months as well. We'll cover some ground, and then we can go into these periods of consolidation, some profit taking. And it's just very normal and to be expected. In fact, we like to talk about how it's really healthy for the markets to go through these periods of pullback and consolidation. What it does is it gives the chart some balance. It gives the markets just a little bit of balance where the buyers feel comfortable coming back in and buying. So anything on that front, Kyle, you'd want to chime in on or add to?
Yeah, I mean, you're exactly right. I like to look at history, especially if we're looking at something like the SPX and look, how does it normally behave? And there are definitely times where it pushes pretty well, takes a breather. We don't have to look that far back, even to the later last year. You
Mm-hmm.
have these areas in which it moves pretty steep, and then we find these areas of these consolidated movements, right? Kind of the sideways stuff, and it likes to repeat itself. However, when you have moments like what you're talking about, this is pretty abnormal, right? And it is
Right.
following pretty significant drop, sure. And what happens is the market likes balance. It likes to, and that's why we look at the moving averages. That's why we
Mm-hmm.
look at these, because that's exactly what they are. Is where is the average move within these timeframes looking backwards? And so as it gets too far to the bottom or to the top, that we look for them to kind of come back, right? And you can see it dancing along these lines. And then when any extreme move happens, we're looking for when and where it's going to pop back. So, yeah, I would agree and say that we've had some irrational moves, but also it's likely to find some of that consolidated movement here soon, if not on
Yeah,
a slight
definitely.
pullback.
Definitely, yeah, and I couldn't help but laugh. I've been seeing over the last week, we've talked about it here on these FogCutter lives. The financial news media can be so disconnected from what's actually going on in the markets. And the last week, we started seeing different banks and Goldman Sachs and all these different types saying, "Oh, we're adjusting our outlook for the year," and they've been raising it up, raising it up. And then I see one this morning, a 12% drop could be in the works. Just all the conflicting media that you can get. But the one pure thing that we love to look at is just the price action, right? What the stock or what the indices are actually doing, and the volume behind it. That's our pure indicator. And so when we cover that much ground in 2 weeks, the way I had it described to me when I was first starting to trade, and I've described this to my teenage boys who are just starting to show an interest in investing in the markets, is when you get stretched away from the moving averages like that, it's like holding a rubber band in your fingers, and you stretch that one rubber band. The more you pull it away from those moving averages, the faster it has the tendency to snap back. So as we've really exploded and covered a lot of ground, especially in these last 2 weeks, we can see that likelihood of maybe some profit taking increase. So where my brain goes in times like these is, if I bought calls that have now gotten profitable, one, we can sell calls against it. That can be a little hedge against a couple days of a pullback or a week or two of a pullback, generate some income still from selling calls. You can also roll those calls up, which is, capturing, locking in some of your profits and making the trade just a little less bullish. So, for example, if the stock was trading at 100 and you bought a 90 strike price call option, now the stock's moved up to 120. Well, that 90 strike call is now $30 in the money, and it's got a nice profit to it. So by rolling that, selling that 90 call, closing it, and then buying maybe a 110 call in its place, you're locking in some profits. You have less of a bullish position now. It can be a great way to lock in some profits. You're still long. And then if there is that pullback, you've got a little bit less of a loss on that position, because the technical side of it is you have less delta on that 110 call than the 90 call. So and then on the money press, for example, we could ratio. We don't have to sell puts for a week. You could take a week off or sell maybe a strike price or two out of the money. But across the board, when I see price action like this, I like to start tightening up my put protection. Whether it's stock position that I own, I want to roll those puts up. If it's a money press, I look to roll those puts up. So when we've covered ground like this, my brain just starts going a little bit defensive, to start protecting some of those gains that we've seen.
Yeah, I feel the same way. And, looking kind of back at the history, the 50 moving average is pretty nice because it tells you, how far away you are from that line of the 50-day moving average looking backwards. And so on average, it doesn't like to get very much further away than maybe 3%. And I just am curious, we're sitting at almost 4.5% currently from the 50 moving average. So, we've seen that. And obviously the close of Friday, it was over 5. So
Yep.
just looking at some of these indicators and looking at it to where, we're not trying to guess every single move, right? It would be impossible. You would look at days, back here in April, and this is why it's very difficult to day trade or do anything like that, because every single day has a different story. There's news coming out, there's earnings happening. But when you give it enough time, that's where those moving averages can really play in and give you more of a story to say, okay, let's look at this whole week and how it plays out. Because if you give it enough time, it's going to play a pretty similar song, which we're going to talk about a little later on in the segment of try not to over trade, because that can be a really difficult thing when you see these individual day moves and say, I've got to do something. So yeah, we're going to talk about that a little more later.
Yeah, definitely. So that's some good analysis to cover kind of where we're at right now, some of the things we're thinking about. Of course, it wouldn't be a podcast here, these FogCutter Live, without a little bit of tariff talk. So the news that broke last week was, even though this July 9th was kind of our deadline for those reciprocal tariffs to kind of kick back in, the announcement came, hey, it's actually August 1st when they're going to start paying the difference in those. So we kind of bought a couple more weeks on the deadline there for tariffs. Just gives them a little more time to work out some deals. We've been seeing it's almost barely makes front page news anymore when a new tariff deal gets done. Those have been just happening a little more consistently, which the market, of course, loves. Loves predictability. So the other biggie for this week is our FOMC minutes, which comes out on Wednesday. So every 6 weeks, our FOMC, that meeting takes place. They announce, what they're going to be doing with the interest rates and monetary policy. And so the minutes from the last meeting are going to be released this week. So a good thing to watch. We've got jobless claims. Of course, last week was the unemployment report that comes out the first Friday, with Friday being the holiday. That came out Thursday. So a few items to watch on the economic front. Really, the FOMC minutes is the biggie that can bring, and it's released during market hours, so that can bring some volatility towards the end of the day on Wednesday. So just to be mindful of that. Then Kyle, you had your eye on some of the earnings that were coming out this week.
Yeah, absolutely. We're kind of in this minor lull when it comes to earnings. We're about to kick off a new earnings season. And, a couple to keep an eye on this week specifically. We've got Delta Airlines, we got a big player, just really seeing how people are traveling. Obviously, the 4th of July was a big one, setting record numbers. And with that, we have some other brands and companies out there, Conagra Brands, which has a lot of food out there, a lot of brands that you'd recognize, as well as Levi Strauss, Simply Foods. A lot of these will give us an idea of people spending and what we're looking at
Right.
there, related to other reports that are coming out. And so, not that we're necessarily fixated on any specific brand this week. Delta Airlines is a big one, but just giving us a pulse on how are people spending money? Is it tightening up? Is it going to be some sort of an indicator for us when looking? Because as we get into this next earnings season, that will give us some sort of a gauge on what positions to get into and how many.
Yeah. And bringing up Delta Airlines, that can kind of swerve us into some discussion, because that's a money press trade that Preston's had going with our WOW insiders. He shared that position. He's been adjusting it and sharing all of those moves with the WOW insiders. And so a good topic is, how do we handle these positions, the money press specifically, coming into an earnings report? What do we do? And as earnings season is just right around the corner again, how do we typically handle a money press when that company itself is going to be reporting earnings? Well, first off, the best, safest thing, because earnings brings volatility, it's so unpredictable. They could have the best earnings report in the history of the company, but then they give some weak guidance going into the next quarter and the stock can plummet. So it just brings a lot of volatility, and it brings a lot of unpredictability. So what we like to do is just close the position down. We don't want to hold that money press position over an earnings report. So that's the first big key for our money press traders. You want to just close that thing down. You don't want to trade it over earnings, because we have some downside exposure in that money press. We usually just want to shut it down. The other really important thing is we're maybe starting some new positions. And if you're checking, one of the things on our checklist is you want to make sure you know when that next earnings report is. And as you're starting a new money press, we like to say, if you don't have at least 4, 5, 6 weeks to money press this thing before the next earnings report, just pass on it. If they've got earnings in 2 weeks, 3 weeks, you don't want to trade that. It just doesn't give you enough time to really get the money press going and working for you. So as we're rolling into earnings season, that's an important thing to remember. Give yourself at least 4, 5, 6 weeks of trading before that next earnings report, if you're starting a new money press. And then if you're in a trade like Delta and they have earnings right around the corner, it's best to just close that thing down before the earnings report hits. So anything you'd add to that, Kyle?
Yeah, just speaking specifically to the newer traders as well, that question comes up quite a bit. And typically once or twice, someone will get burned doing that. It may work out a time or two, but eventually it'll catch up. And so it's a hard lesson learned, because the enticement of trading through earnings, and this is kind of related to the topic we want to talk about, is the volatility will increase, right? The implied volatility, and we'll get some juicy premiums heading into earnings because of the unknown factor that can play, right? Whether it's going to be upside or downside. And so when the volatility spikes and goes up, what will happen is those premiums that we receive when selling that weekly put on the money press go up, which is very enticing, right? And that's done to try and compensate for that volatility, which can be definitely a draw for people to get in there. And if it works a time or two, eventually you trade enough, that's going to go against you. And those lessons can be hard learned, speaking from experience. And so that's why that rule we set in there is close it down. You can always reassess. And there is that component of FOMO. And I felt it to where, hey, that I'm losing a week on this trade that's been so good, or, it's very difficult at times to control that when we feel like we have a finite amount of time, which we do. But when you look at the market and you remember, there's a lot of weeks that we get a trade. There's a lot of time out there that we can take advantage of. But it's important to remember we've got to protect our portfolios, and we got to ensure that we're keeping our, as Stella throws it out there, our soldiers on the battlefield, right? We got to keep them around and know when to fold them, to reference another song there.
There you go. Yeah, good stuff. So again, if you've been following along as a WoW insider, we got Delta rolling around. Keep that in mind. That the safe way to play that is just close it down. And then Kyle, as we wrap this one up, we want to highlight a fun story that came in from Philip, and then go to our mailbag, our Monday mailbag, with a question that we wanted to spend a little bit of time on. So Philip, he said, I'm totally enjoying my investment in Trader's Edge. He started with a small account of $2,500. And again, being an option trader, we're not buying hundreds of, 100 shares of stock where we can trade with a little smaller account. They said he made his first option trade on June 6th and cleared $330. So big shout out to Philip. Said, I'll celebrate with my wife in Mexico next week with a special dinner and some spirits. So great job, Philip. Really fun to see that. We have clients trading like Philip with a few $1,000s. We have clients trading with a few $1 million. You can make these strategies work for you. So that's a fun way to get started. And then I'm sure Philip will continue to compound those gains and see that account really grow. Definitely beats the heck out of 1% savings account or something like that.
Absolutely.
All right. So to our Monday mailbag, we've got the question that rolled in. What's the biggest mistake traders make during volatile weeks? So Kyle, I'll chime in on this, but why don't I let you lead the way to start things off? Because you've been trading for a few years now. I know you probably have some, lessons from the school of hard knocks. How would you respond to that question? Then I'll take a stab at it.
Yeah, I think, what I've seen, one of the biggest mistakes traders make, it's one that I've made. It's just the over trading and trying to force things, right? And trying to turn it into something that maybe it was never meant to be. And it can be difficult, especially when you're in a winning position, but also in a losing position, to where there's very different mentalities that come there. But the winning position, to where you feel like you just can't lose, that it's just going to keep going. And as well, from the losing side, if you have a position that's not a winner, of course it can always come back. But it seems we're much more patient with those losers than we are with winners. It's this weird mentality that if you haven't felt it, you'll go through at some point if you're trading. And so, that's one of them. But just making sure, I would say, a big mistake that I made personally is that idea of over trading, to where we looked at the chart a minute ago. We saw that there are these days and weeks that will move quite a bit. And when it moves any which way, different emotions are going to come. And I've had times to where with the money press midweek, maybe it's down 3 or 4%. And I'm thinking this thing's going to cave in, right? And my emotions get the better of me, and I'll adjust midweek, only to have that stock. So I'll adjust down thinking that move is going to come even further, and I'll save it, only to have the stock kind of bounce back up mid and end of week, to where what I've
Right.
essentially done is cut myself twice, right? To where if I had
Definitely.
just waited, I could have seen that pop back up, no harm done. And of course, there are situations to where it's okay to make those adjustments and moves, but overall, that's what I've experienced and seen many others. Just that over trading and trying to adjust too many times to where you're
Right.
hurting yourself twice the amount, double the amount, to where you could have just sit back, relax, and followed and been okay.
Yeah, definitely. And yeah, I would just echo that. So when I started working with Preston and Trader's Edge, I was doing some of our one-on-one mentoring and helping people learn our systems, learn the money press, and and they'd be part of our Wow Insider, where Preston's sharing exactly how he's adjusting and managing these trades. And I'd get an email like on a Thursday, and they're like, "Hey, it was moving too much. I closed it, or I adjusted, or I rolled it." And I'm like, Preston didn't send out an email that he was doing that yet. Why are you adjusting this? And they let their nerves get the better of them. And just like you said, they can overtrade. They can over adjust. And it made me think of Nicholas Darvis, who wrote the book, How I Made 2 Million in the Stock Market. It's one of our favorite books. We send it out to clients here and there, make sure they get their hands on it. But he talked about when he moved to New York and he tried to be really plugged in and follow the news. He actually saw his results suffer versus when he was out kind of traveling the world and not as plugged in. Um, he performed better. His account performance, his investment performance did better the less he was plugged in. And, you think of just an average trading day. It's going to be up, it's going to be down, it's going to swing back and forth. And if you're plugged in and you're seeing all of those moves, what could have been like a 2 hour sell off can just pull on your emotions, right? And then by the end of the day, it could be right back to where it was at or even higher than that. And if you step back and you look at the last few weeks, the last few months, the the performance of the market or that individual stock, whatever it might be, has been really strong, but you got pulled into a 2 hour swing where there was some selling pressure. And that can distort some of your thinking. So what we're saying, it doesn't hurt to be plugged in, but just try to, push back from the screen a little bit, understand what have we done the last 1 or 2 weeks? What have we done the last 2 months or so? And use that as your real guiding decision maker, not, oh, we had an hour sell off or a 2 hour sell off, or there's some volatility in the morning that can get you where you're pulled in a little bit too close. So, yeah, I think that's well said, Kyle. Being careful to not over trade is a super important component. A lot of times we just kind of let the week play out, because if it starts really strong, a lot of times we can see a day or two of some cooling off. We can see some profit taking. The week starts with some selling. Sometimes we can bounce and recover come Thursday or Friday. So a lot of times it just serves us well to not over trade and get in our own way. So I would agree that's one of the bigger mistakes traders make. They can just be a little too plugged in sometimes, and they can have some of those knee jerk reactions that end up, like you said, it can kind of sting you twice sometimes. So
And with that, just one last thought, because
yeah.
I've seen this for myself, and it's cool because we get to have a special view on our clients from when they start to, two,
Mm-hmm.
3, 4, a decade in, and get to see the same emotional fortitude come about.
Right.
And when someone's new, you can just feel it. They're nervous, and it's understandable, to where you hope and you want every trade to work out, right? But you trade long enough, that's not going to be the case. But what's
Yep.
great is as you get better and start to realize what the risk and with every trade, if going into it, this is the max that I'm willing to put out there. And if that's in line with your account size and your own emotional fortitude, what you're willing to risk, that's a big thing. And then from there, there's really not a lot of stress that can come with it. Of course, it hurts to see a down day, your account losing a bit of its balance. But again, what we have to remember is those aren't realized until you take an action, right? Those
Right.
aren't realized gains or losses until you do something, you push a button. Again, there's other things that will come into play, like assignment, which can be another scary thing. But what's cool is people start to learn the math of the money press and track it. Really, it takes a lot of the stress away to say, oh, I'm understanding it, I'm getting it. no matter what happens, this is the most that I will lose in this week. It can really help you in that sense have that sleep at night protection that Preston talks about, that we teach about. And that's really what we're hoping to get people to that point, because once that's unlocked, it's just fun to see people take off and not
Yeah.
worry about every week, every bit of news coming about, which they do play in. We need to understand those, and which is why we're having these conversations, because if you can get ahead of those, you just get into a routine that works for you. But again, the kind of the cap in this conversation for me is you just need experience. You need to run with it. You need to ride the bike. And then as you have a few repetitions, you start to see what works for you personally. That's why I can't be a day trader. My emotions just get too much of me. That's why the money press works so great, because I have other things I need to do and want to do that I don't want to be glued down. And then I just say the week's going to play out how it's going to play out. And I have a plan. We're going to let it go. So it's just helped
Love it.
me to alleviate some of that stress. And it's fun to see other people when they get that same thing as well.
Yep, I love it. I think that's well said, Kyle. Thanks so much. I'm going to take your advice. I'm going to go jump in the ocean. My boys want to do some more surfing today,
Yeah.
so I'm going to unplug from the market, go enjoy the Pacific Ocean here. So thanks, everyone. Preston will be back next week. Kyle, thanks so much for stepping in. Appreciate you being here, and we'll sign this one off. Take care, everyone.
Happy to be here. Next time.
Thanks,
See you
Kyle.
guys.